Welcome back. You're watching Market Fatafat on ET Now, a show where we get to all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, now we have Aditya Agarwala joining us on the show. Very good afternoon to you, Aditya. Welcome aboard Market Fatafat. And let's talk about the first stock that you have for us. That's Astral Limited. How is this one looking on the charts to you? An attractive bet?
Hi, Cheryl. Good afternoon. Good afternoon to Vinny as well. Definitely, yes. Look at the past two trading sessions, the way the stock has moved up. And following a poll, it entered into a narrow consolidation, can call it a flat congestion zone as well. And now it has broken out from that congestion and continues to make higher lows. A sustained trade above 1750 on good volumes, I believe, will definitely take the stock higher to levels of 1800 to 1900. More of a positional bet, I believe, at current levels. One should definitely latch onto this stock. The technical indicators are suggesting a strong upward momentum should continue. And there's a bullish crossovers as well of multiple moving averages. So all in all, a very strong looking charts and one should definitely look at it. Risk reward is also in favor of going long at current levels for a target of 1900.
Okay, keep an eye on those levels for Astral. Let's move on, talk about Shyam Metallics, this one, and focus on the back of its numbers as well. When you look at in terms of the revenue growth for the company, what is coming over there is it's up by 18% on a year-on-year basis. While on the other hand, the bottom line actually has seen a decline of 40%. We're seeing pressure coming in terms of the operating performance as well, down 38% in terms of EBITDA, while the margins have seen a contraction as well, sharp contraction there, 12.2% versus 23.2%. That's down more than 1,000 basis points. So clear pressure there. But yes, the stock has recovered from the day's lowest point as of now, holding on to gains of around 1.28%.
All right, moving on, let's talk about CG Consumer then. And yes, CG Consumer did come out with a note yesterday. Remember, there was a block deal also that took place. But today...
so you were the one who took the stock today.
I told all of you all to take it. But yes, talking about CG Consumer, why it's in focus today is because Morgan Stanley has come out with its rating on the note on CG Consumer, where they've upgraded the stock to equal weight from underweight. They've cut the target price, however, to 277 rupees from 290 rupees earlier. They're saying FY22 price to 25 price to equity is now at 27 times, making this the cheapest FMEG stock under their coverage. They're saying the risk reward is now balanced. The management management's focus is on driving strong volume growth across their key segments. They're also seeing some evidence of turnaround in the pump segment for CG Consumer. So yes, Morgan Stanley is giving a thumbs up with an upgrade on the counter. No doubt they've cut the target price. Nevertheless, you can see CG Consumer doing absolutely nothing in trade, flat with a positive bias.
Okay, let's keep an eye out on CG Consumers. Let's move on then, and stock number 19 on the charts, we have Havells. Aditya, in terms of charts, what should we be picking up from this one? Because it surely seems like a subdued move that we've seen over the last 1 year approximately for the stock. Finally, an indication that we could see a sharper and a faster up move now.
I would believe so, Vinny, because definitely in the past 1 year or maybe 7 months to about 8 months, stock hasn't done much for itself. But if you jump to its recent moves, it has broken out from a very narrow consolidation. And post-breakout, stock did see a decent up move, and it recently tested that neckline of a breakout. So these are signs of a chart or a stock which is building up and should head higher in the coming times. So I believe I don't see any reason for stock not to test levels of 1400 on the upside. So one should definitely look at buying the stock at current levels. There is a healthy risk to reward. Volumes are picking up on all green candles. And interesting to notice is stock is trading above its 200 DMA now. And the recent correction also halted at the 200 DMA. So 200 DMA is acting as a stop loss line, you can say, and a good support at that level, and stock reversing from those levels is a strong sign overall. So definitely Havells looks strong, and summers is here, Vinny, so Havells should go up.
All right, that's your take on Havells. But Ashesha, Gujarat Pipavav, this one is an earnings candidate. How are the numbers?
This is an earnings candidate. It reported its numbers yesterday, although they were much above what the street was working with, the stock is reacting negatively. Remember, on a year-on-year basis, margins have contracted and volumes have also seen a decline on a year-on-year basis. Revenues came in at 235 crores, which is an uptick of 7% on a year-on-year basis. But as I mentioned, margins have contracted. Company reported margins at 55.7% versus 58% margins that the company reported same time last year. As compared to analyst expectations, EBITDA margins was a modest miss, but overall EBITDA was marginally ahead, and hence overall numbers were better than what the street was working with. Net profit meanwhile has come in at 97 crores, which is an uptick of 31% on a year-on-year basis. So numbers were ahead of what the street was working with, but margins have contracted. Volumes have also seen a decline on a year-on-year basis, and that is why the stock is reacting negatively.
That's Gujarat people for you all. Keep an eye on that one. But moving on, Vamakshi, one more earnings candidate, that's ZF Commercials. What are the numbers looking like for this one?
Well, Vinny, it looks like a healthy set of numbers that have come in from ZF Commercial. When we look at the revenue, that did see an uptick of almost 25% on a year-on-year basis. It has gone up from 782 crores to 977 crores. They also witnessed some healthy double-digit quarter-on-quarter volume growth as far as their domestic MNHCV space is concerned. The company definitely did see the benefits of operating leverage, with other expenses also declining by almost 140 basis points sequentially amid a nearly 60% quarter-on-quarter decline as far as the margins are concerned. On the back of that, we did see the EBITDA rise up sharply by almost 62% on a year-on-year basis. It has gone up from just 89 crores to 144 crores. Margins have also improved significantly, with seeing an expansion of almost 340 basis points coming in at 14.7%, and the net profit especially has nearly doubled to 101 crores. Apart from that, the cyclical recovery that we're seeing is underway in the CV space, and that could be a positive trigger for this counter going ahead. So largely a good set of numbers is the reason why ZF Commercial is in focus today. It was gaining anywhere between 1.5% to 2% today.
All right, that's the stock that's trading higher by about 1.7%. Shesha, coming to you, Tata Chemicals, why is this stock a buzz?
Yes, the stock is in focus after they informed the exchanges that they've reduced soda ash prices downwards. So they've done some movement with respect to soda ash prices by anywhere in the range of 3 to 5%. Remember that this is the second price cut they've undertaken in the first quarter of FY24, and now the cumulative price cut in the first quarter of FY24 stands at about 6%. Analysts believe that globally prices have been falling, energy prices have been falling, and hence soda ash prices have also been falling. And Tata Chemicals has merely passed on the benefit of lower input cost prices to its consumers. They also believe that margin impact of this price cut will be limited. So on account of price cuts that the company has announced to the tune of 3 to 5%, the stock is declining in trade today.
Okay, that's the news flow that is there on Tata Chemicals. Well, Aditya, you too have picked up Tata Chemicals today. Surely it's tanking in trade. Would it be an attractive buy at the current levels then?
Not yet. In fact, Vinny, I believe it's time to exit from the stock, or be a little cautious, at least if you're not looking to exit from the stock. Mind you, stock has not done anything for itself. 200 DMA has constantly been acting as a hurdle for the stock. And now in today's trade, the low is exactly at the trend line. If you draw a trend line joining recent close, so 945 happens to be the low of today, which is exactly at the trend line. If stock starts to trade below 945, so there are high chances you could see a selling pressure, and stock can decline as low as 850 to about 870 on the downside. So be a little cautious. It is showing early signs of a sharp correction in the offering. So if anybody is holding onto the stock, please keep a stop loss closer to about 940, 945, and if that breaks, definitely one should look at fresh shorting with a stop loss closer to about 960 and look for a target of at least 900 to about 850 on the downside. All in all, stock is down on good volumes, so it looks weak on the charts.
Okay, looks weak on the charts for Tata Chemicals as well. But let's move on and talk about Asian Green. This one came out with its numbers, and we're seeing weakness coming in the stock. It dropped as much as 4% intraday at one point of time. Now also seeing the similar levels of decline. When you look at the revenues of the company, they have seen on a consolidated basis, the revenues are down by 5%, coming in at 455 crores on a year-on-year basis. Even in terms of the operating performance, the company has actually reported an EBITDA loss this time of 44 crores versus an EBITDA profit of around 29 crores. And the company has swinged into a loss this quarter versus a profit last year, same time. So yes, clearly, there's a loss this time of 48 crores, which the company has reported in its March quarter. Now, margin decline was sharp due to the steep rise in the gas prices on a quarter-on-quarter basis, and obviously 13% year-on-year increase that we saw in prices due to the non-availability of the administered pricing mechanism gas, which resulted in the spot purchase price for Sabarmati gas. That is what the company highlighted. Other than that, the product change in material subsidy resulted in lower production and a reduction in the margins on traded goods as well. So these are the main reasons which impacted in terms of the margins of the company as well. Asian Granito down 4% in trade.
Alright, moving on, let's talk about GSPL, Gujarat State Petro. Aditya, we saw all of these Gujarat-based PSU companies see a sharp surge after the Gujarat government move. But on the charts, is GSPL showing that bullishness?
It is showing, Cheryl, a kind of a bullishness. There was a congestion zone, and that congestion zone also was also a trend line hurdle, to be honest. And now it has started to trade beyond that resistance, and the trend line hurdle as well looks strong on the charts. It can test its previous congestion zone of 330 as well, and if that is crossed, maybe 380 is also possible on the charts. So definitely looks very strong. RSI has entered into the bull territory. It's trading above 60. That's a very strong indicator, and plus the volumes are also healthy in the up moves. So I would believe that stock has more room on the upside for targets of 330, 380. Makes a decent buy at current levels. Definitely one should look at it.
Moving on, let's talk about CESC because investors has come out with a note on CESC. They're maintaining a buy stance on the company with a SOTP base revised target price of around 98 rupees per share versus 115 rupees per share. What Investec is saying that the stock is trading at an attractive valuations of 6.2 times FY25 price to equity, as well as they are saying 0.7 times FY25 price to book value as well. They are also saying that they believe the worst is already factored in the price. Also, they are not expecting any major impact of earnings provided tariff remains at the current levels. They are also expecting the consolidated earnings to increase at a CAGR of 5.6% over FY23-25 to about 1,500 crore rupees, and that's why they're maintaining a buy stance on the company, as well as of now, the stock is doing absolutely nothing, trading flat.
Let's move on and Vamakshi talk about Tata Motors. This is not in focus on the back of its numbers, but what's the news further then?
Well, Vinny, there's a brokerage note that actually came in from UBS, and they've actually resumed coverage on Tata Motors with an anti-consensus sell rating. They believe that the stock is pricing in all the positives, but it is ignoring the structural headwinds that are actually forming. The market is underestimating the EV risks relating to Jaguar Land Rover, and as far as their domestic market share is concerned, they believe that this is peaking out given the increased competition. They're in fact expecting the PV market share to peak as its launch pipeline appears to be much weaker. So given all these factors, UBS has actually resumed coverage on Tata Motors with a sell rating. They've given a target price of around 450 per share, and that is the reason why the stock is under pressure today. As you can see, it is trading near the day's lowest point, down nearly 2%.
Okay, let's move on then and talk about Titagar Wagons. Now this one, we're seeing that good set of numbers has been reported by the company in Q4. Look at the jump in just the revenues of the company, 974 crores versus 422 crores last year. That's a 130% increase in terms of the numbers of the company. Revenues, profits obviously have more than doubled as well. So strong numbers coming in on that front. Now the profit was a strong number that we saw, mainly because why? That was aided by no loss from the discontinuing operations of its subsidiaries. That was Titagar Firema, Titagar Wagons, AFR France, as well as TSPL, and that's why the jump that we saw in the profits coming in this time for the company was around 110% approximately. So yes, sharp jump in terms of the profits of the company as well. Other than that, when you look at the operating performance of the company as well, as that has also seen a strong performance there, and yes, EBITDA is up by 104%, while the margins are seeing a slight bit of a decline there. So keep an eye on that one.
Alright, moving on, let's talk about Zomato then, and this one is actually trading higher in today's trading session. If you look at the stock at one point in time, it was trading higher by approximately 4% or so. You have not one, but a couple of brokerages that are actually giving a thumbs up on this particular counter. Firstly, let me talk about Morgan Stanley. They have an overweight stance on the company with a target of 85 rupees per share. They're believing that the share price will rise relative to the country's index over the next 60 days. They are saying that they expect that the positive outlook on both on GOV and profitability should reflect in the stock price in the coming weeks. Apart from that, you have HSBC that's come out with a note on Zomato where they're maintaining a buy stance with a target price of 88 rupees per share. They're saying contrary to the fears, they don't expect ONDC-led platforms can sustainably charge lower commissions compared to Zomato. They also say ONDC's key benefit to seller apps and restaurants is basis to the buyer's app customer base. The customer experience is key. They are also saying a near-term concerns of Zomato's take rate expansion, but not a major long-term risk in their view. Therefore, they are maintaining a buy stance with a target price of 88 rupees per share. And if you look at both the brokerages, Morgan Stanley as well as HSBC, both of their targets are upwards or about 80 rupees per share. And the stock right now is trading at around 66. So a substantial upside is what all brokerages are expecting.
Okay, surely keeping an eye out on Zomato. But let's move on and talk about Berger Paints from the paint segment. And Aditya, would this make the top pick for you because the stock has actually been a bit subdued on trade in the last 6 months as well? Good time to enter this one now.
If not a top pick, definitely one of the stocks to look at, Winnie, and it has entered that bullish territory. Now it's broken out from an inverted head and shoulder neckline, and all in all, paint stocks are now buzzing around and they're not falling to start with, and they're picking up pace. Asian Paints did well in the recent times. Berger Paint too looks very strong. As I mentioned, it has broken up from an inverted head and shoulders. Can easily test levels of 655 to about 675 on the upside, trading above its key moving averages. To name few, 200 DMA, 100 DMA, 20 DMA, it's trading above all these moving averages. And RSI too has entered into the bull territory. So definitely looks very strong on charts. One should look at Berger Paints, and given the fact that crude oil prices are also soft, all these stocks are looking attractive on charts.
All right, moving on then. Ashesha, let's talk about Coaltrip Parted. Came out with a number, strong performance, is it?
Strong performance, but it has recovered from the highest point of the day, now sitting with gains of nearly 4%. We can see that sharp uptick which came in when it reported its numbers. Revenues came in at 797 crores versus 376 crores, which is an uptick of 112% on a year-on-year basis. Margins have also expanded to 22% versus margins of just 11% that the company reported same time last year. Profit after tax has also seen a manifold jump this quarter. Net profit came in at 117 crores versus 27 crores that the company reported same time last year. Strong set of numbers across the board, and that is what the stock is reacting to. As I mentioned, off from the highest point of the day, but despite that, holding on with gains of nearly 4%.
Okay, let's move on and then talk about the next stock on the charts, and that's IDFC Limited. Kunal earlier in the show spoke about IDFC First Bank. You're picking up IDFC. What are the charts for this one, Aditya?
They're very strong looking. We need both the IDFC Twins, IDFC Limited, IDFC Bank looking very strong. IDFC has broken out from a cup and handle pattern on very good volumes. Stock has done very well for itself recently, and today we witness a fresh breakout in the stock on good volumes. Can easily test levels of 105 from current levels. That's a decent target to start with, and with a good support at 89-90 rupees, I believe makes a good buy candidate. Volumes are too pretty healthy, sitting with good gains, and technical indicator RSI also suggesting a bullishness coming forward in the stock. So definitely look at it, buy at current levels, maybe put a stop loss below 90 and look for a target of 105 immediately.
All right, that is the take coming in on IDFC. But moving on, Vamakshi, I spoke about Indus Towers as well as Jio. It's your turn now. Talk about Airtel and what Macquarie has to say.
Well, yes, Cheryl, this stock is in focus on the back of that brokerage note that came in from Macquarie. They've initiated coverage on this stock with an outperform rating and a target price of almost 1,000 per share. Now, they believe that Bharti Airtel could emerge as a clear winner in all scenarios where Vodafone Idea actually survives. They believe that Airtel is not entering another heavy capex cycle, which is actually positive for this counter. And in fact, they believe that the group return on invested capital is expected to improve from around 9% currently to 18% by FY28. So a lot of engines firing for Bharti Airtel, and that is the reason why Macquarie has initiated coverage, given an outperform rating. Target price is at 1,000 per share, and that is the reason why the stock is up in trade today, nearly 2%.
Let's move on and talk about PI Industries on the charts then, Aditya. What are the targets that we should keep for this one?
To start with, the target should be 3,600, 3,700. Stock has recently witnessed a lot of volatility, and during that volatility phase, volatile phase, stock entered into a triangle pattern consolidation. Almost broke out in trade today morning. Yet not yet. So below above 3470 is where the neckline is placed for the stock, and if it starts to trade above 3470, I'll go aggressive long on the stock. Many stock has been a massive outperformer. It is just recently that the stock has entered into this volatile consolidation phase. So the moment it starts to trade above 3470, 3500, I'll go aggressive long on the stock because I see big targets here. 3700 to start with, as I mentioned, and if it crosses 3700, stock would enter into an uncharted territory again. And not to forget, the RSI too looks very strong on the chart, so definitely look at it.
Okay, let's move on and then talk about Ashoka Buildcon. This one too is in focus on the back of its numbers. We're seeing a growth of around 23% coming in on the revenues. 2,448 crores is what the revenue came in at. While in terms of the operating performance of the company as well, a bit flattish almost, we could say, in terms of the EBITDA performance, down just 1.92%. While in terms of the margins of the company, that's seen a sharper contraction there, 22.71% versus 28% last year. Profits of the company, that's also seen a major downtick there, but there's an exceptional item that has come into play. Now, profits of the company have come in at 34 crores versus 224 crores. This exceptional item which is there is of around 72 crores. It's a recognition of a liability that the company has done, and this is on the back of the terms of the agreements that they had in terms of the company ACL Viva Highways Limited as well as SBI Macquarie. So there was an agreement which was there between them, and on the back of this, something that was related to that, they have booked in a exceptional item of 72 crores, and that is why a lower profit that we're seeing coming in as well. But nonetheless, even with that adjustment, profits were seeing a decline.
Alright, moving on, let's talk about India Cements then, and that particular counter was declining in trade today. At one point in time, you had India Cements that declined approximately 3% or rather over 3%, taking the stock price to its lowest level since April 28th. Remember, the company reported a widened Q4 loss before exceptional items at around 128 crore rupees, and this compared to a loss of about 36 crore rupees a year ago. India Cement has lost market share due to the lack of capacity additions and is expected to continue in the same path in South India given the capacity addition by the peers. That's the word coming in from Motilal Oswal. Also, Elara Capital analysts are saying that any benefit on the cost front may be softened by soft price trend as a supply overhang is expected to keep cement prices volatile in company's core market in South India. Also, Motilal, Elara as well as Anand Rathi, all of them have gone ahead and reiterated their sell stance on the company, and therefore you can see the stock also reacting exactly to that bearish sentiment coming in from the brokerages. The stock is down about 3% as we speak.
Absolutely a bearish sentiment coming in from the brokerages. But Aditya, you too have a bearish sentiment, or would you say it is the right time to pick this one now since we've already seen a correction here?
No way, the correction, maybe the stock has definitely corrected from the highs of 300, but I still believe there's more room on the downside. Definitely looks very weak on the charts, and it has broken down from a bearish flag pattern on good volumes. So stock going down, breaking down on good volumes is not a healthy sign and should not be bought. Because I believe stock can test levels of 170 and 65 on the downside. Trading below all its moving averages, volumes like I mentioned are high, and RSI too has broken down below 40 mark, so it has entered into the bear territory. Overall looks very weak on the charts. One can in fact go ahead and short the stock for targets of 170 to 65 on the downside with a stop loss at 190 on the upside.
Alright, and that is the take coming in on India Cements from Aditya as well. And with that, we come to the end of taking stocks on Market Fatafat. Thank you so much, Aditya, Vamakshi, Ashesha, as well as Kunal for giving us your take. But here's an ET Now exclusive, and government has asked states to rope in central PSUs for expediting the set target of 25 crore smart meters by 2025. ET Now has learned from sources that Power Grid, PFC and REC may soon get big tenders for smart meters. My colleague Prakash is here with all the details. Prakash, over to you.
See, the central PSUs like Power Grid, PFC and REC may get big tender for procurement of smart meters. And these smart meters will be supplied to the states going forward. Sources are informing that the Power Ministry has given instruction to the states to rope in central PSUs for procurement to meet installation target. We are given to understand that the instructions have been given to those states where tender was issued, but they did not receive much interest in terms of bids from private companies. Apart from that, in a case where states have already issued tender, they have received multiple bids as well, but on higher rates. In that case too, Power Ministry has allowed them to approach central PSUs. However, Power Ministry has rejected the proposal of some states to adopt capex cum hybrid mode instead of capital expenditure plus operational expenditure mode for procurement of smart meters. Power Ministry has asked them to stick to the previous guidelines for necessary procurement. Also, instructions have been given to all states to float a tender for procurement of smart meters latest by 15th June 2023. As you are aware that the government has approved a scheme for installation of 25 crore smart meters across the country, and that is part of the overall financial package of rupees 3 lakh crore that was announced by the government, and rupees 23,000 crore has been separately earmarked for procurement of smart meters by the state discoms, and failing in which will cost them reduction in their central grant.
Okay, thank you so much for that, Prakash. On that note, it's a goodbye from Cheryl, myself, as well as the team who put this show together. But as we bid goodbye, we at Times Network are back with our flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda. As we move forward on the path of integrated, equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just an Indian economy, but the global one as well. To pursue this, the agenda of the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, and corporate world. So get ready to catch all the action here on Times Network.